The property markets finished 2021 on a high, and there's still plenty of momentum left. And in this week's Property Insider video, Dr. Andrew Wilson and I discuss a couple of records that have been broken. We talk about what's happening to our economy, to our labour markets, and we talk about the state where most people are leaving and the state where people are heading to. Of course, this is going to affect the local property markets. If you want to keep up to date with what's happening in our property markets, please subscribe to this YouTube channel and click the little bell icon so you're notified each time a new show comes out. As we come to the end of a year, it's interesting to look back and reflect on the challenging year we've had in 2021 and how well the Australian economy and Australians in general have survived. Look, it really wasn't that long ago that there were credible predictions that tens of thousands of Australians would lose their lives, that the health system wouldn't cope, that there'd be mass unemployment and that our economy and our property markets would fall into an abyss. But fortunately, as 2021 draws to a close, our economy is in recovery mode. We've experienced a once-in-a-generation property boom, and our housing markets have broken multiple records, finishing the year at record level highs, with the number of suburbs with a median price over $1 million doubling over the last year. In fact, the number of suburbs where the median price was over $3 million has doubled as well. And another record, the average Australian household is wealthier than they ever have been. Look, no doubt there's challenges ahead, but there's also lots of good news, and that's what I'd like to discuss today in this week's Property Insider Chat with Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yes, hello, Michael. How are you today?
Great. It has been an interesting year, and it's a year where, despite all the challenges, Australian households just keep getting wealthier. Now, of course, it's based on the fact that the value of their homes and their investment properties and their superannuation funds, their share market has gone up.
Well, certainly, if we look particularly over annual wealth increases, it does reflect the property market, of course, and the cycle. And it would be highly unusual, if not extremely unusual, for us to actually fall in terms of our wealth over an annual period. And that would reflect a significant decline in house prices. And we've really only had 3 years of declines in house prices in the modern era, Michael. And I count that from when reliable statistics started back in the mid-'80s. And it's, of course, reflecting what's been a very strong year for house price growth this year. And we can all end the year, I guess, again, reinforcing the robust and resilient nature of our housing markets, despite all the usual suspects and their doom and gloom.
Well, our economy finished the year very strongly as well. So have our labour markets, Andrew.
Yes.
They bounced back hard over November after those lockdowns, especially the big lockdowns in the southeastern states, Melbourne, Sydney and Canberra. Unemployment rate has dropped again.
Yes, Michael, back in town, the Australian economy after lockdowns in Sydney and Melbourne obviously impacted labour markets, and Canberra, of course, a smaller market. So we've virtually made up for what we lost during lockdown. A little bit more to go in terms of people moving back into the workforce, but that will occur, of course, as we hopefully maintain open borders, but not as restrictive in terms of our COVID policies. So yes, the question is going forward now, of course, Michael, as we push that unemployment rate down, which seems likely going forward if we don't have, as I said, those restrictions, whether we'll be able to generate the incomes growth that we haven't been able to generate since the GFC as a result of low unemployment. That's the big question mark next year. Will we get the wages dividend from low unemployment, perhaps full employment that our policymakers are banking on? I'm not so sure about that, but all will be revealed next year, Michael.
Well, when you dig down further, some states did much better with employment growth than others. But again, that's not a surprise. New South Wales and Victoria recorded the sharpest declines in unemployment.
Yes.
That's because they opened up from being locked down, Andrew.
Yes, and very interestingly, Michael, Queensland reported the strongest growth, and Brisbane the strongest growth in employment over the year. And I think that reflects the surge in migration into Queensland, particularly southeast Queensland, of course, is aiding the local economy there with job creation. And I think it's remarkable that given that surge in migration, interstate migration into southeast Queensland, perhaps we could call it the COVID refugees, that the unemployment rate in Brisbane has remained quite healthy as well.
Well, Where are they all coming from? Where are they coming to Queensland from, Andrew?
We don't have that exact data at the moment, Michael, but the latest population statistics were released by the ABS for the June quarter, and it really did reinforce the trends that we've seen over the past year or 18 months since lockdown occurred. And of course, the two noticeable trends are that there's been a real exodus out of Victoria in terms of net interstate migration. Victoria lost over 18,000 net migrants over the year ending the June quarter. And that's perhaps the highest level of loss from net migrants since 1995, Michael, which of course was the period of that great recession of the early 90s, which
I remember it well.
Well, it was a terrible time. I remember it too, Michael.
Yes, we were both there. The joke used to be, Andrew, would the last person leaving Victoria please turn the lights off? Remember that?
Yeah, we lost the state bank, and it was just a terrible, terrible time in Victoria, particularly Melbourne. And a lot of people voted with their feet and left the state. But these numbers now are the highest since that period, Michael, which is quite interesting. And I think obviously it reflects the severity of lockdowns and the impact that it's had on Melburnians. But the offset to that is the big winner was Queensland. Queensland recorded its strongest annual increase in net migration, interstate migration, since 2005. So it's been a very big run into Queensland over the last year. And the trend is certainly continuing. So I don't think we have to draw too long a bow to suggest that many of those Victorians that are leaving the state are heading into southeast Queensland. And there's a lot of anecdotal evidence and other to support that. But certainly they're the two ends of the pineapple, if I could say that. Victoria, biggest losses since 1995, and Queensland, the strongest gains since 2005. And of course, this works its way particularly into housing markets when we do get these short-term sharp shifts in migration, either in or out. And currently the Brisbane housing market is Australia's strongest capital city housing market in terms of prices growth. And on the other end, when we look at the rental market, we have seen the Melbourne market just having higher vacancy rates, particularly for houses, than any of the other capital cities. And I think that's just that slight weakening of demand in the rental market as a result of perhaps that migration out of Melbourne. But interestingly, when we speak about Melbourne, with the prospect of a surge in migration commencing in the new year, I think we'll find those migration numbers, particularly international migration numbers, will help to change the pattern, the trend of the Victorian migration numbers, because Victoria typically is the destination of choice for international migrants. And I think we'll see that. So we might see a bit of a rebound in demand in property markets in Melbourne as a result of the reintroduction of international migration, which is going to occur pretty soon, I think, Michael.
The Melbourne market hasn't performed as strongly as Sydney or Brisbane. On the other hand, overall, it's done very nicely during the year. And the auction market seems to have held up very well despite all the challenges, the lockdowns, the lockups of COVID. But now that we have been open for a while, auction numbers have really been at record highs.
Well, Melbourne has actually had quite a reasonable year given the lockdown issues. In fact, prices growth in Melbourne will be around about 20% for the year, which is really nothing to sneeze at. And we've had a remarkable December, Michael, as you indicated, in terms of auction numbers. Auction numbers typically rise over the second part of the spring selling season and clearance rates fall. It's the fundamental law of supply and demand, which tends to ease the market in terms of particularly clearance rates as we move to the end of the year. This year, we've had record numbers of auctions across the board in most capital cities. Particularly Melbourne and Sydney have broken records for December. In fact, Melbourne and Sydney broke all-time records for auction Saturday listings during December. And there's not just the end of year surge that we see, Michael, driving that, but it's also the catch up from the shutdowns in September and October. Those vendors whose activity in the market was constrained by lockdowns have added to that usual end of the year surge. And that's been another factor, significant factor, why we've had these record numbers. And I actually think that given unprecedented numbers of auctions at this time of the year, that clearance rates have actually held up. Melbourne had a clearance rate above 65% again, despite a record end of the season day. Last day of the year, auction day was a record in Melbourne, and still a healthy clearance rate. And following the weekend before's record day of auctions. So as buyers have been spoiled for choice. Buyers tend to get a little bit more disengaged at the end of the year than sellers. And Sydney, similarly, its clearance rate was the lowest actually since May 2019. Again, it was confronted with record numbers of auctions for the final day in Sydney and followed the previous weekend's all-time record. So no surprise that clearance rates have dipped on the last day of the year for auctions. I still think we've got plenty of untapped demand in that market, which has been perhaps needing a little bit of a rest, Michael, after what's been a remarkable performance given the constraints this year in all our auction markets. And I still think we've got demand ahead of supply in all our markets going forward, and particularly given we're going to see the reintroduction of mass migration next year.
Well, that means that we're going to start the year with a bang. There's still pent-up demand. Interest rates still remain relatively low. Our economy's picking up. People are feeling more secure. And that's important. You've got to feel secure in your job financially to make a big decision of buying a new home or buying an investment property. So I look forward to 2022, and I look forward to catching up with you once a week again in 2022 as we can help people understand what's really happening in the property market.
And looking forward to yet another interesting year, as all our years are, Michael, are they not? Happy New Year.
Thank you very much. All the best for the festive season too.